Hello and welcome to the look ahead for Thursday, the 11th of July, with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out from the data from Australia, consumer price expectations, and European session. We've got German CPI. This will be the second reading. UK GDP data is also expected, and US CPI and jobless claims. So let's just start with what to expect from that US inflation print. Obviously, the Federal Reserve will be watching it closely. It's expected to show that inflation cools to 3.1% annually, down from 3.3%. Obviously, these figures come after we've been listening to Federal Reserve Chair Jerome Powell as he testifies before Congress. And basically, we've been hearing that the Federal Reserve again just want more data showing that inflation is cooling towards that 2% target. They obviously acknowledged, Fed Powell acknowledged that inflation is making progress in cooling, and also that the labor market is cooling as well. So it does seem that they're on the right track, just waiting for more confirmation of that. So if we get a weaker, a cooler than expected inflation reading, then that could really drive further those expectations that the Federal Reserve will start to cut interest rates sooner, potentially as soon as September, which is what the market's pricing in at around 75% at the moment. That's up from 45% around a month ago. Now, obviously, the Federal Reserve in their latest FOMC meeting back in June signaled to just one rate cut this year, but the market seems to believe that they will be cutting twice. Now, we've also got UK GDP data, which is expected to show that that growth. GDP expanded by 0.2% in May, up from 0% in April. Now, if we do get some weaker than expected or cooler than expected inflation and stronger growth in the UK, then that could give the pound US dollar a further boost. This is the pound US dollar chart that we're looking at the moment. Now, we've seen that it's been broken out of this falling trend line, which dates back to July last year. Just breaking out here, pushing above that 128 level, just testing the weekly highs. Resistance at around 128.45, 128.50. Now, the pound is also getting a boost from several Bank of England members who have sounded a little bit more hawkish this week as they come out of the blackout period surrounding the election. Today, we had Hugh Pill say that he wasn't basically comfortable with the persistent inflation in the UK. Now, Hugh Pill is the chief economist. His opinion tends to be fairly representative of policymakers. So it does suggest a little bit of uncomfortableness with the sticky service sector inflation and wage pressures, similar to what we heard from Hawke, Jonathan Haskell at the start of the week. So if we do sort of get this strong growth from the UK, which reinforces those concerns over inflation, and we get cooler inflation in the US, then I'll be looking up here for this level. Next one to take out will be the 128.94. That is the 2024 high. So we just that's the level we'll be watching for on the upside. If we get above that, then do you know what? 130 will be the next one to be watching for. On the downside, if we get weak growth and we get hotter than expected inflation, check out that 128 level. That's the level that we've just sort of been testing over the last few days. And below that, we've got the 127.75 is the falling trend line before 127. Now, I'm just going to take a look at gold as well whilst we're talking about the US inflation and what to expect, because inflation gold here is on the verge of breaking out. We can see it's just testing this 2377 level up here. This is it's around 2388. We can push above that, then it's going to bring this level up here, the all-time high of 2450, back into focus. If we get hotter than expected inflation, might find that the US dollar rallies on the back of that, could bring gold prices lower. 2320, that's the falling trend line resistance. And then on the downside, 2300 will be the level below that. The other one to watch for, I think, when we're talking about US dollar and expectations for Federal Reserve rate cuts, obviously the US dollar, Japanese yen. Now that's been trading in this very tight little range since the end of June. It's not really pushing above that 162 level. And if we find that we get some weakness, a hotter than expected inflation print, then we'll look to be taking out that 162 level. But I think if we get cooler than expected inflation, then we'll be watching out for a break around that 160 on the downside. Just finally, let's just have a look at what's going on in the on Wall Street, on the Dow Jones. So we've got the S&P and the Nasdaq trading at record highs. Dow Jones isn't there yet. It's trading around that 39,500 level. It's capped on the upside by around 39,600, just over that. That was the weekly high. Also the July high. We've also got the 50 SMA, which has been guiding it higher. That on the downside offers some support around the 39,080 level. So it's been guided higher. We'll look for a break. We get cooler than expected inflation above that 39,600 level, and that could bring 40,000 back into focus. Just finally, we're also going to be having a look at, the euro US dollar. We've got that German inflation data. German inflation is the second reading, so we're expecting it to confirm the preliminary reading of 2.2%, very close to the ECB's 2% target. Look, we're finding the thing is with the euro at the moment is I don't think it's necessarily been driven that much by data, but we haven't had that much data. But obviously, you've got the political picture in France, which is, I think, potentially going to cap gains in the euro for now. They're trying to sort out this hung parliament. You've got the Left Alliance that has won the election, but not with a majority, so it needs to form a coalition government, which means complex negotiations will be starting, could go on for a relatively long period of time, which obviously means that decisions won't be being taken in France, which is the second largest economy in the Eurozone. So yeah, just on the upside, we've got this 108.50 level. That's sort of a resistance on the upside. But if we do get that weaker, cooler inflation from the US, then we could get a rise above that level. That will bring the 109.13 on the 15 on the upside into focus. On the downside, support immediate there is 107.78. That's the 200 SMA. If we get a break below there, that brings 107 into focus. So I do hope that you've liked everything that you've seen. And if you have, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.